So it's a PIA operational assets are being sold, and that means that all the aircraft and all the assets and all the things which are related to the operation are being sold. So what they have left out is the legacy debt of the PIA. They have separated it. They have separated its engineering department, and they've separated a few other things. So whatever is within the operation of the PIA, that is being sold. And there are multiple liabilities that are being converted to the PIA, the government holding companies. There's a legacy debt of about if I, 500 to 700 billion rupees or something like that. In the last year, when the privatization first attempt was made, that was already converted to that because nobody was willing to buy an entity with a 700 odd liability, which were accumulated over the period of time. So that being transferred to the government, and rest of it is being sold to the private entity. Long-term fiscal exposure has changed in the sense that if there are going to be any future liability because of the operational inefficiencies within the organization, the government does not have to assume any of the loss. For instance, their losses in the past 10, 15 years accumulated to 700 billion or something. So that's become a fiscal liability, right? And every year 20, 30, 40, 50 billion on was adding to that. So, and if the entity would not have been privatized going forward, the similar numbers or maybe higher number would have been added into this. Now, this is being sold to the private entity, which has injected 125 billion to turn around the company. Hopefully, the company will will make profits, and when it will make profits, it will be taxed as well. So, if a company that was having a liability of, let's say, 50 billion a year, and going forward it make a profit of, let's say, 50 billion, out of that maybe 25 billion, 20 billion would go to government as taxes. So government would benefit in a way of 70 billion rupees per annum. And you see, the bleeding was a continuous process, and there was an accumulated that was bleeding as well because of its service was bleeding as well. There's long-term pension and the liabilities, they were bleeding as well. Now these being separated, and last year operationally the company was marginally profitable. So it's not bleeding at this moment. If the private company runs in a smarter way, and they're lucky in doing so, it will not bleed. If the private, but airline is a tricky business, as we all know that Indigo India is in negative equity. Air India is making very hard to make money, or any other airline in the world. It's very hard to make money. So there could be a risk of bleeding going forward as well. But that would be assumed by the private party, not the government. But most likely they'll make profits, and they'll make money, and whatever the legacy cost, the government will has a plan to end in the next 5 years or so. That has nothing to do with the PIA future plans. That is something, a legacy that is being that assumed by the government, and the government will use the fiscal subsidy or somehow and will pay it, and it has a plan to pay in the next 6 years. So there's nothing to do with the private entity, but that's a legacy debt which government will pay eventually. And even if it doesn't, the government doesn't pay it, it has no impact on the private entity, to be privatized entity of the PIA. I mean, there's a liability of about 650 billion. If say that, and if they're paying it in the 6 years, it'll cost around 100 billion or something to the taxpayers. If they pay it in a longer time, the amount would be lower. So whatever the legacy cost, that will be borne by the taxpayer. But even the PIA had not been privatized, that would have been borne by the government. But there was a chance of more accumulation of losses, which may stop. I think it's more than a fair price, and there was a competitive bidding process. As you saw, it was live telecast. I was following with the potential bidders, the Arif Habib and the Taba group, and they both are thinking that the fair value should be around 100 billion on that, and the reserve price came to 100 billion, and one of the group came up with 101 billion, other with 115 billion, and the heat of the moment the bid went up to 135. So it went up 35 billion above the reserve price. It went up 20 billion above the winning bidder price. So it's a fair value, I think, and The company which didn't buy think that the returns were diluting over 120 billion. So definitely it's a fair value for government, and government fetched a very good deal at that time, in my view. And when the last deal was there in October 24, perhaps there were liabilities of 33.6 billion were there in that, which were due to the FPR and airport authorities. Subsequently, in this scheme, those were removed. So 33.6 billion were removed, but the fresh liability started as well, because that deal was closed in April 2024, and till June 2025 another 26 billion were added into that. So there is a reduction of 35 billion approximately liabilities, but fresh liabilities of 25 billion added to that. So the net impact is about 10 billion from that and today's value. The other thing is they have allowed the deferred taxation on parts and machinery buying, which generally is not applied to any airline business, and they've done it with the best international practices. The rest of the deal is pretty much same what it was last year and now, and it fetched better price, I assume. Absolutely. I mean, the reserve value was kept at 100 billion, and the entity bought it at 135 billion, which is a 35% premium to the reserve value. This shows the confidence of the private, the people who are buying it, and they show that this asset has a potential to turn around. It's a confidence booster. This is like after 20 years, the last big deal was happened of the K Electric in 2005, and there was a PTCL transaction happened in similar time as well. So after 20 years, the one big deal has happened. Okay, there was one smaller deal happened a few weeks ago, months ago, was the First Woman Bank, which bought by $14.6 million by UAE consortium. But now this PIA, a big entity, is happening after 20 years. So this gives the confidence in the privatization. The next in line is Zareet Rakyati Bank, which is relatively easier. And then it provides impetus for reforming and privatizing the SOE, especially the distribution companies in the energy sector. That's a big challenge. I think PIA deal was relatively much easier to happen, and the difficult ones are coming. So it's just giving you the platform for privatization commission to move on to the difficult part. I mean, the liabilities have to be socialized. Nobody's going to buy the liabilities. Like in PIA, there was a liability of about 650 billion rupees. So if you would have sold this with 650 billion liabilities, nobody would buy it. There's like it would take maybe 50 years or more than that to recover that 650 billion rupees, and nobody will come into that. So you have to socialize the cost, but that socialization of the cost is the cost which has been already occurred, the losses which are being accumulated. No one in sane mind would buy the losses which we have accumulated in the past 20 years. So it's not the socializing the cost, it's about the losses which have already been incurred are taken out of it, and there are going to be no future costs. So it's in a way the question is not right. Socializing cost is something like that when there's some form of subsidy in the private entities that the government take. That is not the case. There's no that. This is a genuine reform in a way that they'll be able to do this transaction. They've seen that the private sector has shown the muscle to buy it. So this will give this a certain confidence and a political headwind to move towards that way. But how would this sustain? It's a very different question. As I told you, that PIA is a very different animal than the difficult one in the energy sector, where there are issues of the real estate, where you cannot separate the liability so easily from that, where there are social costs exist, as you talked about that, because there's certain sectors where you give the electricity at a cheaper rate than that you produce. You don't provide any air ticket to cheaper to anyone on that. So it's a very difficult transaction to happen. So this provides some room into that, but we have to find out how they will move forward and how they have a sustainable model. Okay, if I find out that one of the distribution companies is going to privatize, then I would say that it's a sustainable model to get to the 9. Now it's just giving you a little bit of confidence booster and little bit of room or a runway for privatization commission to work on the more difficult schemes coming forward.